I want to show you the difference between a trader and an investor. Now we'll take a look at Algorand for the past week, starting on June 12th, 2021 and ending on June 19th, 2021. Now, at the very beginning of that week, you can see that Algorand started at about 96 cents. And right now, it ended at about 96 cents, right? So, the investor during that week wouldn't have made anything. But the trader, on the other hand, has the opportunity to make more. Let me show you what the opportunities look like. If you look down here on June 13th, Algorand is at 96 cents, right? If you look later in the day on June 13th, Algorand tops out at $1.06. So from that 96 cents to $1.06, that's an opportunity. That's a 10-cent swing. So if you put in $1,000 and it swings 10 cents, well, you made $100. So you look for these opportunities during a down or stagnant market. Here's another one. Let's go down here on June 14th, and let's go look later on June 15th. So you held it for a day. Go to $1.09 from $1.03. So that's a 6-cent swing. So these opportunities are there for the trader. Let's take one more. Go down here on June 16th. It's at $1. And if you go to the top here, it goes to $1.08. So it's almost another 10 cents that you can make. So those where the opportunities are. You have to find these opportunities. And the way I find them is I'm constantly watching and sorting by the hour mark. That way I can see what's going up and what's going down. So that's how I do it. And that's how you can make money in a stagnant or down market. The investor made zero, but the trader can make a good amount of money if they just follow the opportunities.